It's time to dive into the world of finance and see what today's market has in store for us. So grab your virtual popcorn and get ready for the market moves, where the latest trends and expert insights come together to keep you ahead of the game. But before we dive into today's exciting market moves, let me share a quick success story. One of our community members recently shared their journey, and it's truly inspiring. After just 2 months of implementing the strategies and tips from our videos, they've already made an impressive 138% return on their investment. This goes to show that with dedication and the right approach, anyone can find success in the stock market. And remember, it's not just about luck. It's about learning, adapting, and staying informed. So if you haven't already, hit that subscribe button and join our growing community of like-minded individuals who are passionate about investing and growing their wealth. All right, let's turn our attention to the markets. The last few days have been pretty rough, with significant drops across the board. Even the mighty Dow Jones didn't escape unscathed. Yesterday, it plunged by more than 600 points, which is equivalent to a shocking drop of nearly 2%. However, the Dow Jones is still holding on to its position above the crucial 30,000 mark. But will it be able to maintain this level? Well, only time will tell. Over in the tech world, the Nasdaq had an even tougher day. It plummeted by more than 2.2%, marking its lowest point since early October. The market was buzzing with the news of rising interest rates and concerns about inflation persisting longer than anticipated. The Federal Reserve's decision to keep interest rates higher for longer sent ripples through the markets, leading to this downward spiral. Investors are now anxiously awaiting the upcoming earnings season, hoping for some positive surprises that could turn the tide. As for today, the markets are showing signs of a potential rebound, with all three major indexes moving back into positive territory. This comes as investors cautiously optimistic that we might have seen the worst of the recent sell-off, but it's important to remember that the markets are still grappling with uncertainty and volatility is likely to remain elevated. Now let's shift our focus to some investing insights that could help you navigate these turbulent times. Warren Buffett, the legendary investor known for his long-term approach, recently revealed that he's been adding to his stock portfolio during the market downturn. This move reflects his belief in the long-term growth prospects of the companies he invests in. Buffett's strategy serves as a reminder that while short-term market fluctuations can be unsettling, a long-term perspective can be incredibly valuable. Next, let's talk about the power of diversification. By spreading your investments across different asset classes, industries, and geographical regions, you can mitigate risk and enhance your portfolio's resilience. Diversification doesn't guarantee profits, but it can help you weather market storms more effectively. Consider allocating a portion of your portfolio to assets that have historically performed well during inflationary periods, such as real estate or commodities. Now let's delve into a specific stock that's making headlines: Tesla. This electric vehicle giant has been on a roller coaster ride recently. After reporting strong earnings, the stock saw a surge, reaching a new all-time high of over $1,000 per share. However, it's important to note that Tesla is not immune to market forces, and its valuation has been significantly impacted by interest rate hikes. As investors assess their positions in light of rising interest rates, the stock's performance may continue to be volatile. And finally, let's address the elephant in the room: the inverted yield curve. This economic indicator has historically been a reliable predictor of recessions. When short-term interest rates surpass long-term rates, an inverted yield curve is formed, signaling potential economic trouble ahead. While an inversion doesn't guarantee a recession, it's worth keeping an eye on this indicator, as it could foreshadow challenges for the markets in the near future. And that's a wrap for today's market moves. Remember, stay ahead of the curve, diversify your portfolio, and keep an eye on key economic indicators. If you want to keep learning about personal finance and the stock market, check out the links below. Thanks for tuning in, and until next time, happy investing.